Dalal Street falls for the third straight week. The Nifty and the Sensex fall 1 percentage point each. Financials, IT stocks fall the most. Midcaps outperform the blue chips. On today's episode, we decode the week on Dalal Street. We put the spotlight on IT stocks in the first quarter earnings. So hello and welcome to this episode of Editors Roundtable. I'm Reema Tendulkar. With me are Nimesh and Prashant. And joining us here in the studio is Rahul Arora, CEO of Nirmal Bang Equities. Not studio, but newsroom. Rahul, hi.
Good afternoon. Thank you so much for having me.
Guys, I'm exhausted.
Because of the IT earnings.
I use Nimesh's health to describe the market. So it's like Nimesh is a little down.
Even
not out.
He's still
hanging in there. But he's feeling a little weak. He's not able
and so is market.
So we're going to ask him to say less. I mean, that's the state of the market. I mean, very much there, but
down but not out.
Sort of, down but not out.
Yeah.
So,
how would you feel? I mean, how did you feel? What were your key takeaways about this week?
No, I think it's a lot of the negatives and positives are already pretty much in the price. I think we're back to tracking earnings. I think both from a tariff and a geopolitical standpoint, Q1 has seen it all. Rate cuts, you've seen it. Crude is behaving, rupee is behaving. So I think both on the positive and negative side, I think the pre-result commentary as well, and apart from what you were saying in your headlines in terms of banks and IT, even something like a Trent or a DMart hasn't had the best of pre-result disclosure. So I think the market is now back to, I think for the next 3 or 4 weeks, squarely focusing on earnings. Hopefully we don't have incremental downgrades, but you never know.
But again, it's going to be a big week, right? I mean, this weekend is going to be quite big in terms of large cap numbers reporting. Reliance will report today evening. You have ICICI Bank, HDFC Bank reporting numbers. ICICI Axis was a bit of a shocker to you, Rahul, and can we read too much into other banking numbers as well?
Not really, Nimesh. In fact, as a brokerage house, we've actually been recommending a switch trade from Axis to SBI for quite some time now. I think that we've been recommending that trade for almost about 3.5 months now. I think the problem with Axis, Nimesh, was that the credit to deposit ratio is in excess of 91%. Yeah. Now, when you have that high of a CD ratio, you can't grow. You are at best grow between 5, 7, 8%. The problem with Axis was not only did growth not come, your NIMs compressed by 30 basis points, your asset quality deteriorated. You basically had everything,
Correct. The bigger doubt was the asset quality.
Exactly.
Which is why I'm asking, is this going to be a bank specific, or you're going to read too much?
No, I don't think it will be across the board. Okay. I think you'll probably have it on a bank-to-bank basis, but I don't think you'll see similar commentary from HDFC, SBI or ICICI. I think if you look at Kotak also, Nimesh Bhai, it's the first time they've declared their provisional numbers, and it was a blowout. I think, you've... now the valuations of Kotak are very similar to ICICI and HDFC, but it was relatively under-owned. So if you have a situation where Kotak and SBI deliver well, you have a situation where ICICI and SBI are already trading at 2.6, 2.7. You may actually find a tactical intra-sector shift more towards SBI and Kotak. But Axis, I think, has been a bit of an outlier. They'll have to raise deposits. I think at 91%, you are constraining growth dramatically. And the most important thing on Axis was on the calls, they did not call out saying that this is the end of the provisioning. I think they've left it fairly open-ended. So the market is thinking, will there be some more in Q2? And it's not a cheap, bank. I mean, even going into results. So I think it's more an Axis-specific issue. But like I said, I think our preference at our brokerage house would be more towards SBI and Kotak, because ICICI and HDFC is pretty much a consensus buy, and Axis would probably be the lowest of the pecking lot in the large.
Anything in the mid-sized private banks, Rahul? Because RBL will announce the results tomorrow. There is a fundraising lined up in RBL Bank. Interesting. There is this, the regulator approval is pending for the new CEO. Anything within in the small private bank that will...
City Union Bank, I think, would be our top pick. I think we recently hosted Mr. Kamakodi as well. Of course, he's in his last year as being the CEO of the bank. I think he's done a remarkable job in terms of, maintaining asset quality, keeping growth very balanced and maintaining his ROEs. I think it's a remarkable thing that he's achieved. Again, City Union is not the most expensive. I think Federal has always been something that's been more expensive than a City Union. But I think if you expand that to, say, housing finance companies, you could even look at something like a PNB Housing Finance. I think this is probably, if I take large cap banks, SBI top pick, mid cap banks, I think City Union Bank top pick. And if you look at housing finance, I think PNB Housing Finance could be interesting. I think gold has played out to a large extent, so Muthoot, Manappuram, I wouldn't touch too much into right now. But these would probably be the three in the BFSI space.
Kotak is interesting because I've heard this from bankers that balance sheet size is about 6 lakh crores, 6, 7 lakh crores. If you look at the larger ones, HDFC Bank, ICICI Bank, they're like 20, 25 lakh crores. It's present in all segments, but growth has been lacking for the last few years. It's got a new management Your favorite theme,
CEO change.
Dinesh. New CEO at the helm. So, I mean, can something happen there? I mean, can it... and of course, you've got a regulator which really wants to kickstart another credit cycle. I mean, that's very, very clear. I mean, it's asking banks, what do you need from our side, right? I mean, you've got to go out and lend. So, in that sense, maybe it's a reasonably large bank, but not really one of the mammoths like ICICI or HDFC Bank. So, could it be where those two were 3 or 4 years ago? I mean, I think that's a tempting question which many are considering.
Perfectly fair question. And I think that's what I was alluding to when I was talking to Nimesh. I think it's tactically been relatively under-owned compared to ICICI and HDFC. So while valuations may be very similar, I think you could still find a bit of a trade going there. The other thing, Prashant, to note here is, when we talk about banks these days, you also have to look at an SOTP. So I think if you look at, if you look at the annual report of Kotak Life Insurance is doing very well. Yeah. It's got amazing VNB margins. It's got the best-in-class return on equities. If that entity lists on its own, my sense is you could get a 3-time price to enterprise value or price to EV straight up, embedded value. So that could be one. Mutual funds are listing, right? So I think Canara Robeco has got its approval. ICICI is doing.
Is coming up.
Right. Most of the mutual funds in India would be operating at an ROE of about 30 to 40%.
Yeah. So first off the block would be ICICI Pru.
Sorry, I think Canara Robeco will probably be the first to list because I think they've already filed their issue. I think ICICI has just appointed the bankers, but I think it's not just about Kotak Mahindra, the bank. I think even the subsidiaries. I think even though they are, of course, the largest competitor we have on the institutional side, I think there's somebody that we all look up to.
When numbers come, we look at what? We look at standalone numbers, but the consolidated is
the entities are doing remarkably well. There's absolutely no issue there. So
all
I think
capital marketplace.
Like I said, so there's not too much comfort on valuations, but I think tactically it's been relatively under-owned. So I think in privates, because ICICI and HDFC are already trading where they are and they're over-owned, a little bit
housing
of
finance, Rahul, you said Canfin.
PNB Housing. Canfin would probably be a number 2, I would say.
So
if you want to look at
none of the diversified NBFCs. I mean, PNB is, of course, housing finance.
Yeah.
But you got the bulk of the sector champions. I mean, that era is gone. Everybody wants to do everything, right? I mean, everyone wants to go like Shriram Finance or Chola or, for example, even IIFL. I mean, everybody does everything. There are very few sector champions in that sense left, which was the case 15, 20 years ago.
It reminds me a lot of consumer durables. I think if you go back a few years, I think if you looked at refrigerators and washing machine players, there were 3 or 4 people that had 80% of the market.
Yeah.
Now today, everyone's doing everything. Same thing with electricals.
Correct.
Havells had its own specialty, V-Guard had its own. Now everyone's doing everything. So obviously you have that. But I think if you want to play it through diversified financials, I wouldn't look much beyond Bajaj Finance, to be very honest, even today. I think it's been the bellwether. I think the first mover advantage it has in everything, including consumer lending. I think the only other person, only 1 or 2 people who have managed to compete with it are IDFC First and HDFC Bank. But I think the first mover advantage was so much for BFIN in the businesses that they've gotten into. Even today, they're growing at 25% plus in terms of customer acquisition, in terms of growing their top line. You don't hear of any issue in terms of growth. There is not a dire need for capital. Return on equity is best in class. So why would you look beyond? I think housing finance is a bit tempting because that, KK Mistry used to often say that, so one is, what the Prime Minister used to always say, that 65% of India...
But it's just that housing finance has been such a...
consensus trade.
Yeah, but it's not worked. And maybe that's the reason why maybe it'll work now. I mean, from here on.
I think if you look at growth rates, right? Let's take a look at Home First Finance as well. Take a look at Aavas. I think most of these are growing north of 20%. I mean, what else is growing 20% in
No, I'm saying stocks. I mean, I think that is also because with the private players, a lot of supply is coming, right? Aptors, all these Ps have been constant sellers.
Absolutely. I mean, even if you look at a stock that's not often spoken about, which we track, which is Housing Urban Development Corporation, HUDCO. I mean, the valuations are not cheap at about 2.5 times, but it's growing at 20-25 times. I mean, the ROEs are close to about 13-14%. ROAs are close to about 1.5-2%. I mean, what's wrong in there? Of course, the liquidity is an issue. But yeah, I think you're right. A lot of these have had supply come out, so they've got lapped.
I mean, HDB, for example, we just...
but their trailing also, Prashant, was about 3.5 times. So to make money on an HDB, I think anything that goes... And I think HDFC Bank and even Bajaj Finance, for that matter, has taught us that beyond a point in financials, you cannot
I remember Home First was trading at some 7 times at one point. I mean, 6-7 times. But it's all kind of sort of now, over the last 1.5, 2 years, come off a little bit. Financials is one, that's one big pillar. The other is IT services. And... Rima has had a busy week and busy week ahead as well. Rima?
So I think one thing that stands out clearly is companies are struggling for growth. Yeah. And many analysts are pointing out that this could be a long drawn period when growth rates are going to be muted. But I think the more interesting thing is what's happening on the margin front. HCL Tech lowered the margin guidance by 100 basis points. TCS failed to show any meaningful expansion in their margins despite a lower contribution coming in from BSNL. And companies are taking steps to arrest this margin weakness, right? Look at the wage hikes. So far, no IT company has given a wage hike, right? TCS was the only one which used to always give 1st of April. The only time in their history when they didn't was during COVID. But this time they're not giving it. They've still, even after 3 months when we asked them, they're still saying we're waiting for the macros, to settle down to decide that. So clearly there's something happening on the cost front, right? You could say it's AI related, maybe AI is deflationary, maybe companies have overhired and they're still paying the price for it. HCL Tech also spoke about restructuring. They're yet to give out the details of the restructuring, but basically on one hand, they're going to cut back on their extra office space, maybe internationally, so they're going to optimize that. But they also said very specifically there's going to be people-based restructuring, and there is a one-time exercise. So are they going to rationalize their overall headcount? So, and Ambit, in their note, they say, I think, it was post HCL Tech, but they're basically saying that will margins be the next casualty after growth in the sector? Even the hiring has been so muted. In the last 12 months, Wipro has cut close to about 1,100 employees. For Tech Mahindra and HCL Tech, the hiring has been very, very marginal in the last 12 months. And again, just to recap the growth numbers, all 4 IT companies have reported a constant currency revenue decline in Q1. Right on top in terms of worse off was TCS, minus 3.3%. But even the others, Wipro was down 2%, Tech Mahindra was down 1.5%. So, things have been tough on growth. We knew that. But I think this time, what's happened on the margin front, on the cost side, has been a little different from the past, and it's interesting. What is your own takeaway?
No, I think you've pretty much summarized it very well. I think the fact is the valuations weren't cheap going into the results. I think most of the frontline IT companies, bar Wipro and Tech M to some extent, were trading at anywhere between 22 to 25 times. And I think the margin for error is very low as you grow in. I think IT today is in a very similar position to where, say, consumer companies are, where you have to take a trade-off between growth and margins. And I think while you alluded to some of the frontline companies, I think if you throw in a Tata Elxsi and a Tata Technologies also into it, the margin performance was disastrous, especially from Tata Elxsi was an absolute shocker. I think it was almost 250 basis points lower than our expectation. So I think companies will have to take a call. Our own assessment is that frontline IT companies, if they're lucky, will grow at 8 to 9% CAGR between 25 and 27. That's not a very high rate of growth. If margin expansion doesn't happen in a material way, then you're looking at single-digit earnings growth as well. Now the question is, for single-digit top and bottom line growth on frontline IT companies, do you want to be paying north of 20 times? The question, if I was to answer it, I'd say relatively be underweight. And I think you're starting to see in a lot of the companies that you mentioned, auto, manufacturing, anything related to that, there have been kickbacks and spendings from the client side as well. So I don't think this entire issue of tariffs is played out in its entirety.
But even for instance, now if you have a choice between IT and consumer, both are giving you single-digit kind of growth, right? But consumer is still more expensive than IT.
It is, but I think on a relative basis, if you look at consumer, I still think there is a potential chance that you could get a double-digit growth in earnings. I think that is a bit of a challenge if you look at frontline IT companies. Now, where I will exclude is probably LTI Mindtree, where I think they'll probably land up doing 11-12% kind of growth. But if you look at, say, an HCL Tech, TCS, Infosys, HCL Tech, definitely not double-digit growth for the next 2 years. LTI Mindtree by the skin of its teeth, maybe. Infi has still not declared. But I think the ER&DS players is probably where the growth will be. So I think if you must, there will be mid-cap companies that will do well. So if I was to buy one today in the entire IT services, frontline space, I'd buy Coforge, regardless of valuations, because at least I get some growth. And maybe a KPIT Commons, because the initial evidence is not that good. Now, KPIT could also test you, because like we were saying, auto and manufacturing is not doing good in the US. But I wouldn't rush in to buy IT right now. I'd probably wait. There is no compulsion to buy. The other important part about consumer is crude has behaved itself, and they're trying to cut costs to the best they can. What if crude goes down to 60? Just a theoretical situation. You do have that lever of margin growth that you can get. So I think one of the main things that happened for Hindustan Lever in the last decade, say between 2013, 14 to about 24, 25, is they actually compounded their top line only by about 8 or 9%, but their margins went from 14 to 24%. Now, certain things like these have also happened in IT services, and TechM has been an outperformer on margins in that regard. So incrementally, if your margin figures are not going to come, valuations are going to come into question. So I would probably be maybe 100 to 150 basis points underweight IT if I was a portfolio manager, and I would probably look at buying more on the mid-cap IT space or ER&DS players rather than looking at buying frontline.
Prima, 23rd, Coforge.
Along with Infosys.
Along with Infosys.
I mean, when was the last time you actually went into the third week of July and Infy hadn't declared? I mean, for a lot of people who've been in the market for like 25, 30
It used to be
years,
first.
It used to be first.
And then TCS started.
They used to actually
reporting
fight to be
earlier.
first,
Yeah,
like
yeah.
TCS and Infy. It's been
I mean, the other thing, Rima, is I know maybe we should take that
We
break.
should take
but,
that break.
And then
You know, I was in the studio in the morning and Lata was coming in and she was waiting for Mr. Puneet Chhatwal of Indian Hotels. And we sort of, that brief moment that I was going on, she was coming in and we happened to talk and it just stayed with me. She was talking about this huge, consumption boom still, which is pretty steady, right? I mean, everything said and done.
at the upper end of the K, Prashant.
Upper end of the K, but these IT jobs, I remember asking that question to TCS, no hikes, right? And hiring is very, very limited. These are lakhs and lakhs of net additions every year, which you used to see, which have just gone away. Maybe GCs are making up for some of it. Maybe there are other sectors, but we can't see. I mean, journalists are typically a little, we look at the
These
negatives.
co-working
Maybe they're-
spaces which feed on jobs and the formalization of the workforce, and they are doing so well. Whether it was, you hear Brookfield, whether it's SmartWorks, they had a very good listing. IndiCube is just opening its issue next week. So clearly, office spaces are getting added, particularly on this co-working and flexible managed office.
I think we can go on.
Yeah, no,
No, we should-
I can see Prashant so stressed to take that break. He's like, I think we should.
No, I'm not trying to take that break. I'm just thinking that, but it's a
No, but
topic
it's an
maybe.
interesting space you bring up, Prashant,
Yeah.
because hotels have done really well.
Yeah.
I think if you looked at ITC hotels as
Yeah.
well, I mean, and even Indian hotels to grow at 30%, I think obviously you'll probably have a bit of softness because of what has happened geopolitically, even at our borders and the unfortunate plane incident. But I think the hospitality sector, Alcobev, aviation, they're all doing really well. Premium two-wheelers like Aisha, just look at the growth that you're seeing. So I think the upper end of the K is all right.
Yeah.
I think it's still the lower
I
end.
think media also is consumption.
Sorry?
Right? I'm saying media is also consumption.
Your own
Media
stock.
is
I was listening to Rahul's
was talking
interview,
about-
and while I was listening to Rahul's interview, the stock kept rising. I think it
You
was up
subscribe
50.
to Prime or no?
Sorry?
Have you subscribed?
Yeah,
to
I'm a
Sen-
Prime member.
Perfect.
Oh, you are?
Yeah.
Oh, lovely.
good.
I mean, just a disclaimer, CNBC, the channel you're watching, of course, is part of Network 18. Just standard disclaimer. We'll take a quick commercial break here. We're going to come back and continue this very interesting chat with Rahul. Stay with us.